All right, welcome everyone. We are back, and we just added a new platform for our stream. So hopefully you're all seeing us on both Facebook and YouTube right now. And we're going to continue to add other places where we're going to stream this live. Um, but we are back with the Quarter to a Million podcast, Quarter to a Million Quest podcast, really, because that's what it's about, the quest. Quest of going from $250 learning to trade forex and bringing it to $1 million plus. And but I've got to say, always want to open with this, that this is not financial advice. We are not licensed or trained professionals. We can't give you advice. What we're doing is we're simply documenting our journey and sharing the stuff that we're learning with you. Do with it as you will. Get professional advice, whatever you need to do. But we are not making financial recommendations here. We're simply documenting and sharing. So with that, Mike, are you seeing this where you wanted to see it?
I sure am. I'm about to finish one thing right now, but I do see it where I want to see it.
All right, that is fantastic. So what we're going to do is we're going to look at, first things first. We want to make sure that we're charted. I was in a GJ trade earlier, and it did hit my stop loss. Unfortunately, it was in profit, and gold took a turn. And one of the things we learned is that gold, GJ sort of moves with gold, and gold was moving, not super volatile today so far, but it was moving. And but as we were getting close to that 10 o'clock hour with news coming out, it certainly it turned pretty fast.
Yep.
For GJ, I was surprised it turned as fast as it did, but I was like, it'll come back. And I figured my stop loss was low enough. I was good, but not so much. So
Yeah,
one of those things.
I took a .01 lot size on that
Yeah.
when we were talking about it on the GJ, and down about 40 pips. Yeah, down about 40 pips.
Yeah. So, but it looks like outside of, well, it just about hit the 10 moving average. Actually, I'm looking at the 5 minute. Let me go to the 1 hour here. I want to share my charts with you, by the way, too, because we should be sharing those charts. Let's see here. All right, so this is GJ on the 1 hour, which is where I was. But I took this candle right here and I took it up. And I was like, all right. So I took it up to about here, where it topped. And I'm like, all right, this is going to continue to go up. I was expecting it to go up to this zone. And it didn't quite do that for me. So I didn't get out. And as it came down, it hit my stop loss, like I said. So, but you're in this right now. Where did you get in, Mike?
Right where you were talking about, I got in about halfway to that wick, up that wick, just below half. So right as it started moving up that wick, I watched for some progression. We were talking about it on a call as well. I saw the movement up. I was looking for it to go up to that demand zone, trying to grab like 20 pips or so off it, a little bit. I think I set my stop loss at 213.028. So basically 03. So just slightly below where that demand zone, where the support zone starts above.
Yeah.
And yeah, there was it bounced down to the 200.
Yeah, and actually it flipped this zone. I hadn't gone back there to change it yet, but this
Right.
zone
That's the
needs to be
support zone.
flipped in color.
Yep.
So I was just looking at it, realizing I was like, something is off here. Well, that's what was off. So, but yeah, and it came all the way down to the 200 moving average right here.
Yep.
So I was like, all right, so that would have been a great place to buy in. I was not on screen at the time, so I didn't see that, but I would have bought there again and then taken it back up for two reasons. One is we've got the 200 moving average, which is a good resistance point, and you've also got the back wall of the zone. So
Yeah.
I definitely would have, if I was watching the screen, I would have taken it up.
So let me ask you this. I mean, two things. I mean, I do like to set alerts on the 200 on the 1 hour, but to try to help people here, why don't, if we don't mind,
Yeah.
could we go to either GJ, either drop down to the 30 or somewhere, or even go to maybe UJ? Let's go to UJ, something that's not marked up, and let's just do a very gentle markup of like support zones and demand zones.
Sure. Let's
As
go.
to how we do, just so we can show people like what we're doing. This is a good example right there. The Euro USD. Perfect.
Yeah. So, and so there's a Einstein call here, by the way, which is something we can talk about. So it looks like it was a decent call for TP1. But yeah, so let's mark this one up. I'm going to remove Einstein though. For those of you who don't know, Einstein is one of the services that we have with our educational subscription that we all pay for and utilize. But it's a phenomenal tool. We'll talk about that more later. Let's get to what you want to talk about, Mike. So let's mark this puppy up.
Yeah, I think it'd be good if we can just at a high level today, so people could just understand and get that base fundamentals, not fundamentals, like the technical analysis, but the basics of it, just so they can understand how to have a rough idea of what to look for.
One of the services that we have.
So, because I found this very beneficial when I first learned it.
So well then, you know what? Talk us through it. Pretend I don't know this stuff yet. And where would you start marking this one up? I'll do the drawings because I'm here. Could you just tell me where you want to do it?
If you don't have it marked up, why don't we go to the 1 hour? It's just a little bit less. And it's pretty foundational. Okay. So first thing I always do is look for at the top. I look for demand zones at the bottom, which is basically, well, we'll see here. The rule that we have is you're looking for a red candle, which is a bearish candle, and next to it is a green candle, but the green candle should be moving up to the point where it is, the red candle is about only half as big as the green candle. Now the green candle in this scenario right here, where you have 4 simultaneous bullish candles, which are the green ones, those can count as one candle in terms of deciding a demand zone. But you can clearly see that red candle in the middle there is not 50% of the length of all those green ones.
Right. It's more than
it's more than 50%. So 50, it has to be less than 50. Okay. So
does this one count?
That one definitely counts. So that's what we're going to do. So we use our tools, which is right here, like a shape tool. We grab a square. We start from the top of the base, not from the wicks. And we draw that. Now, we like to try to keep the colors uniform, so it's always visually simple and it gives the eyes a simple, easy trigger. So what we do if our demand zones is green, and that's just the color that we use. So any sort of demand zone that we're going to draw on the board, this is where we're going to make sure that it's green. Now, why we care is this is where we would potentially look to get into when price comes back. If we refer to the front wall of the demand zone, that's the top line. Okay, so then the bottom line is the back wall. Okay, so like right now, price is pushing down. You can see it right there, that live candle. Yep, that's a bullish candle heading down. Sorry, a bearish candle heading down because it's red. So it's a bearish candle heading down. If it we would be looking right now, I would be looking to potentially buy as it gets to that back wall. Right here. Now, one of the other things that we have to consider here too is we also have
Mike, a quick thing. I'm going to interrupt you. Just explain what you're referring to as a back wall, because somebody new might not get that.
Yep. So in that demand zone, okay, this area right here is where there's going to be where we're expecting to see demand. Okay, and this is where, for example, sellers are right now in control, and then buyers often will take back control of the market right around that demand zone. So as it pushes back in, that's typically a strong indicator that things are going to turn around, or that things are likely to turn around. Now, it's not going to do that every time. Sometimes it is going to push right through it. But that is something that we're actively looking at. Like right now, we'll see what it does. It's pushing down right now. Some people like to get in at the front. I prefer to wait to the back for that confirmation. Now, below that, Don, though, we also have a low with those two candles right there. So we have a low and a base there. So can you just draw a line going across? Yep. And that's a support line. Okay, so that's giving support. If you think of it like, I was told before, if you think of it like in a house where you're standing on the floor of your support, you can't stand on the ceiling. That's a resistance because you can't jump. If you try to jump up and you hit the ceiling, you're gonna not get knocked right down. So the top is resistance, the bottom is support. So that blue line down the bottom is a support line. So if that ends up pushing through the demand zone, would be looking. Yep. So if that red bearish candle, so red candles are bearish. Okay. If it pushes through this zone, then we'd be looking for a turnaround potentially for it to bounce off that support line. Would be the next area with just the basic information that we have right now in front of us. So this is just areas where it's a good idea for us to potentially look to get into buys. Now, right now it's getting close. A lot of people would jump in if you're starting out, especially. Excuse me. I am not. Yes, that was a knee-jerk reaction to jumping in at that point. It's not only is it a lot safer and will it save you a boatload of money, but wait until you get to the areas. Patience is absolutely essential.
Spot on. Yeah, and that's why it's going to be frustrating sometimes. I'll tell you this because I wait for the back wall as well. So when it hits this back wall, I know it's most likely going to bounce off. So what I do, and just to keep it simple, is I'll put an alert, let's say here, before it hits the back wall. And when it gets there, I'm looking at other indicators. I'm going to look at the RSI and other stuff that we'll talk about that would support a turnaround, right? And I'm just watching them. So that way, when it hits that back wall, I'm pretty confident it's going to go in the other direction. Usually I'm pretty confident anyways, because this is a demand zone, right? So what really is a demand zone? Let's think about that one, right? So we have, we see this candle coming down. Now this candle came down pretty fast for UJ. I'm sorry, Euro USD.
Especially on a 1 hour.
Yeah, it's so there's some momentum there. So I haven't looked at the fundamentals on this, which is the news that's coming out. And oh, there's my alert. It just hit my alert. So it crossed that. It came down. It touched the alert, and it bounced right back up. Look how fast that moved up.
Yep.
Right, that's wild. But normally you don't see this kind of fast movement on the 1 hour on a Euro USD. You'll see it on gold and other things, but where I was going with that was this. The reason that this is a demand zone, all right, we've got demand zones, we've got supply zones. We'll talk about those. But we figured this out by looking for a candle that was bearish. In other words, the trend was going down, okay, and it turned around at this point and took off at least double what the bearish side was. The reason we mark that is because that's where we believe buyers are hanging out. They're waiting for the price to get to that point. Because in any market, we're not here alone, right? There's how many trillions? Was it $7 trillion per day is traded on Forex? Is that number correct?
Yeah, I think so.
So there's a couple of buyers there, there's a couple of sellers, and we can make money whether it's coming down or going up. It depends on which way we choose. So, but if it turned around at this point, especially strongly like it did, the odds are that at this point there's some buyers. And so as this gets down, the odds are there's buyers here again that are going to take it back up. Not a guarantee, but likelihood. Did that all make sense, guys?
It did. And I think that it's important for us to realize that, all we're looking for right here, there's so much more, but we're going to keep it really simple right now so you guys understand the way that we understood it at first. What's important to understand is when price enters the demand zone, we're likely going to see the price turn around like you just saw. It just played out exactly like we expected it to play out.
Yeah.
Okay. Now, as Don said too, and we're not going to go into this today, but this is part of the technical analysis. There is fundamental analysis, which ties into news that's happening. Like, let's say something happens where President Trump says something right now, and that influences the dollar's value versus the euro. That can change things. So that takes more importance than anything that's going on the technical side. So you just have to be aware of that. You don't have to know everything. You just have to be aware of it, or stay away from it when there's an expected speech coming up or an expected talk or something that could implicate changes that are out of your control. But when we know what we know, this is what we completely understand, is that as it comes down into a demand zone, that is the time we're looking to buy. Now, in this scenario, the two things that I see right below it that you don't always get is you do have that base below right there. So you do have that strong support base. So if it does push through, we have that. And then even off to that, right off to the left there, that second, the wick that comes down right there to the left a little bit.
This one?
Yep. So we have that as a potential support line from a low earlier too. I mean, it's not an all-time low, but I mean, that would be just something I would be considering and taking a look at. If price pushes through, is it going to turn around there at that line, or is it going to push all the way down to the other support line that we've already marked? Right now it's coming down, so let's see what it does.
Yeah. There's my alert again saying, hey, it's coming down to that point. It's bouncing off that point. That's now its third time. And it went a little lower, so just about hit that back wall.
Yep.
And it jumps up.
Yep.
So it's testing it, but it hasn't hit it yet.
Now, I'll say this too, like one of the things that we learned too is part of understanding this is we're going to get into this a lot more later, but if we're going to make this trade, we want to make sure we have some risk management on here, because we don't want to risk our entire account, or we don't want to do anything, especially while we're learning. Okay. So right now, in terms of a stop loss, which is where we can say it can't go lower than that, I would set the stop loss just below that bottom support line. So that bottom support line's at roughly 1.17793 about. So I'd probably set my stop loss at like 1.17790. So what that means is if price does go down below that, I'm out of the trade and I can't lose more than that. And that's important to understand. But that's where these lines come into play as well. They help you understand not only where price is likely to turn around and where we want to get the best opportunity to jump in the market, but it also lets us know how to protect ourselves and how to leverage our risk management to set the proper parameters so we don't lose too much money, or that we're getting out before the market turns if we get a profit.
Yeah.
So right now, let's see, is it going to touch that support line, or is it going to push through? It's pushing through.
Yeah.
No, it bounced right. Well, that time it bounced right off it. It bounced right off that.
On that one. Yeah.
Yep.
Yeah.
So that's why I'm saying, like, I have that line marked just to see what it does, but it's probably going to push through it, but we'll see.
Yeah. So, and it was interesting because I was watching, so, and I was getting ready because my account's up. I could have pulled the trigger on that buy, right? I didn't, because I'm looking at one, I knew we had that support line, and it's been moving pretty rapidly. We also have, the RSI, which is something we'll get into later on, but it broke through what we call Jerome. All right, it broke through. So the purple line is lower than the yellow line. In this particular case, that matters because that's a stronger downtrend. There's a lot of things we look at, and we're going to share some different things with you that be like, hey, I don't know if that makes any sense. It's not clicking. I will tell you, for me, it took weeks to really have things just start to gel in there. But it was worth it. And we're still brand new as far as I'm concerned. I know the person we're learning from is a guy named Donnie Pips. He's a master trader, made and lost and made millions. In fact, he lost $1 million once on one silver trade. Which is, I don't know that that's a good claim to fame, but he made the money to be able to do it. All right. And there's a lot of knowledge that comes in, but he was saying, it took him a couple of years to really get this down. But I don't know if he was learning it through a coach or what.
Yes, he had a coach.
At the time, so he had a coach. In our case, we have a coach. He's our coach, and it's pretty neat. But we know it's going to take some time to really get super proficient at this.
Yep.
But
And
if you know when to get in, God, were you going to say something about this, Mike?
no, I was going to say just flip that zone, and we'll talk about that in a second.
The zone. Are
Yep.
we at
Oh, it
the?
hasn't closed yet. Actually, hold on. My bad. It hasn't closed yet.
Yep. Another 20 minutes.
Yep.
So, well, let's talk about that anyway, so people understand, so they know what we're about to do, and if that happens.
Yeah. So see how the candle is still moving. And as Don alluded to, off to the right there in the red, that tells you where the price currently is, that 177.890. And then the time below it, that 20.17, 20:17, that tells you there's 20 minutes and 12 seconds remaining before that candle closes. Now, when the candle closes, a new candle forms to the right. If that candle closes below the demand zone, okay, then that demand zone will flip. So what that means is that candle now becomes a demand zone. A supply zone. So what that means is we were talking about support and resistance before. So if the candle flips from a demand zone, as we know that's where buyers are, and it turns into a support zone, then that lets us know that that's where sellers are. Okay, because now that zone has been flipped. And that, again, that's only if the candle closes below it.
Yeah,
So
and I
we'll see what
apologize for changing the screen on you, by the way. I was just trying to shut that alert off.
Don, it's live. Stuff happens all the time. We're good. We just
Yeah.
kept on flowing.
Mhm.
Not our
So-
first rodeo. We're good.
Yeah, yeah, we've experienced it.
Yeah.
So this is definitely moving a lot. You know, I'm looking at how much, and people who are brand new at this are just seeing this for the first time. They're like, you know, I don't know. It doesn't mean anything to me. Well, see that number to the right in that red box? It says 27.6. That's pips. Okay, that's what we're looking at, and that's how much this particular candle has moved. Our objective is, whenever we can, to take 20 pips profit, or more. Or more is good, but even if it's a little bit less. But so we're watching this thing. What is going to be its support line?
Yep. One other thing I just want to add too is, one of the mistakes I had made when I first learned this is, do you see how that red wick right there, that bearish candle that's live, see how that red wick is below the support line that we had?
Yeah.
So we leave it here because that candle's live. That candle has not closed and we're in the trade. So we don't make adjustments to our support and resistance lines in our zones when we're in the trade.
That's right.
When the trade is over, or when the candle closes, that's when we make the change for subsequent trades. But it's important to do that. I had the mistake where I kept on making them live. So some of it, thinking I was staying on top of it, but I actually damaged my foundational structure because I was adjusting something that was live, and I shouldn't have been doing that. So it's important to understand that. But the biggest thing that we want you guys to understand, and you guys and girls, is as you're taking a look at this, all right, all we're trying to do is get a base level, pun intended, knowledge of where price is going to turn around and where is a good point to enter into the market so we can get those 20 pips that Don spoke about. 20 pips, if you think about it, it's just like steps up. Okay, so in terms of Euro USD, you can see that that's $1.17 point. So it's $1.17, like 956. Those third and fourth decimal points, that's where we start talking about pips. Okay, so we're talking about fractions of a penny.
Mm-hmm.
But for Euro USD, that's what we're focused on. So that can have, it seems like it can't have big implications, but it can. We're not going to get into the financial and the investment side and how to put small money in and get a lot of money out in terms of like margin and leverage. We can talk about that at a later date. But the bottom line is there's a low barrier to entry to get in. There's a low cost to get in this. And there can be a huge upside. But you have to understand. And that's where there is understanding where price is going to likely change and starting off with support lines, resistance lines, demand zones and supply zones. So Don, why don't we do this actually? We just went through some support, some basic level support and demand. Why don't we draw a resistance line? I'm sorry, why don't we start with a support zone right up above there? I think that tall bearish candle right to the left there, that's probably my first one, I think.
Which one? This one?
Right there, down. Yep, that's a support zone right there. Yep. All right. And then I like to also mark those two, the top wicks on those two bearish candles as resistance lines. So the middle one there, the tallest point on the page. Yep. Right
So this
there.
right
Yep.
here.
At the top of it. Yep.
You just want to mark it right at the top.
Yep. It's a resistance line. And can we make that red as well? Because I'm ridiculous.
I was just waiting for you to guide.
And then I mean, the one right next to it. See that one right next to it too? Like go up. Yep. But I would go to the left because that's pretty much a base. So we can go right to the right there and just go straight across because that's pretty much a base. You have those two candles plus that wick's hitting the same spot. So right then and there, okay, in terms of just base structure. So you guys understand. Then the bottom, the green, that's a demand zone. That's when the price comes down to there like it did. That's where we're looking to buy. And then it bounced off that support line. And see how it's staying steady at that support line? That's why this general information matters.
Yeah.
Now, there's a chance it will push through. It already has gone through it and then came back. But we'll see what it does.
Yeah.
But then as price starts to move up, it's also not coincidental. Do you see like where the candle came up and then it pushed through the demand zone, but then the top of it started just below it.
Yeah. Yeah. So there's definitely been some significant movement down.
Well, that candle right there, I mean, let's look at that support zone for 2 seconds, just briefly speak about it. So you can see it was a support zone based on where we drew it off that smaller green bullish candle right there. And then right then off to the right, you can see there's 1, 2, 3, 4 bullish candles that push through it. So right at that point in time, the zone would have been flipped to a demand zone because now that's where buyers are because now that's the bottom where we're looking for it to move up. But the next candle pushed back through it and closed below it.
Mm-hmm.
So then it became a support zone again. Now, the next time that a candle closes through it, that zone goes away. So if this candle happens to close above that support zone, that entire zone gets deleted and removed. It's gone because it's now been crossed 3 times.
And just to clarify on the closed candle, so each of these candles represents 1 hour. How do I know? Because I'm on the 1 hour chart, if you can see this up here, all right? If I was in a 30-minute chart, candles are very different, okay? That's how much the candles have moved in 30 minutes, okay? You can see our markings are still here. But in the 1 hour, these are 1 hour candles. And so we have left on this candle, we still have 12 minutes and 13 seconds, okay? And you can see that countdown. And that's really important because we want to know where this candle closes. It's like Mike said, if this candle closes below this demand zone, as soon as this clock resets for the next hour and we have a new candle and it closes below, then yeah, this flips from green to red. And now this is the top area. All right. This is our point of resistance for it going up above. And then we got to look at what's below. Now, this is pretty funny because we've got these 2 support lines. It did break one of them. All right. I think this one is going to be a pretty strong buy.
Yep.
The question is how far up, right? I don't think there's going to be, we're not going to get a 20 pips going up on that buy. I don't think. Just because of the momentum coming down, and I'm looking at my RSI still pointing down. So I'm expecting that it is going to bounce off of this, and it's probably going to come up into this area.
Right. Well, if it closes below, that's now a support zone.
Yes,
Now that's an area of resistance.
right, right. So
And what that, and just again to say it very clear, because the first time I heard it, it took me multiple times to hear this. So I just want to reiterate to what happened to me, and I'm internalizing here. What we mean by that is if that flips red into a resistance and price comes down wherever it goes down below, if it hits that bottom support line and that becomes red, then as price pushes back up, once it hits the front wall, we're expecting to see sellers start to enter the market. Okay. And then we're expecting to see that sell. Now, by the time it hits the back wall, we're expecting to see a lot more movement and a lot more momentum of sellers jumping in. So we're expecting it to turn back around again in many scenarios. So that's just what we're looking for. And you can see off to the left there where it was kind of fluctuating and staying with that top line. That top line was decently strong.
yeah.
And then over here, off to the right, yeah, that bottom. I mean, the bottom line was decently strong as well. The back wall.
And you can see that all the way through. I mean, even starting with this long red candle over here,
Yep.
right? You know, we had a floor, and this is that same support line here. All right, I could have brought it all the way over for the most
Right.
part. All right, it's a little bit higher, but just about. And but this zone, it held here, it held here, it held here, here. We had another zone up here, which also held, and then it came, but that's where the sellers hit, brought it down, right? And now we're at this point where I think that is a good point. So let's look at, oh, I'm sorry, I'm looking at this. I want to see this come down. So as this comes down, one of the things I want to look at is so once it gets down to about here, where it is now, I want to look and say, all right, what are the lower time frames looking like?
Yep.
Right. And watch that, because my interest is in getting into a buy at this point. Now, if this retraced all the way up to this wall here and into where this candle was, the candle before, I would consider taking a sell at that point and taking it coming down.
Yep. Now, I will say this. One of the things Donnie had mentioned specifically yesterday is when he is trading on the 1 hour chart,
Mhm.
he drops down to the 30 to look for entries. So let's do that.
Okay, so we're on the 30.
And the first thing we want to see is the information relatively the same? Does it match up? And it does.
Yep.
Mike, at some point, if you can post in here when we're doing live on a future day,
Yep.
his set of rules that he had for his time frames and what he looked at.
Yeah.
Because I wrote them down too.
Yeah. I found that very beneficial because
Yes.
I like to know where he likes to go, because without going off on a tangent, if you start dropping down and then dropping down and then dropping down,
Mhm.
you can start getting almost too much information, which not only causes either analysis paralysis, but it can also cause fear and cause you to start taking actions emotionally rather than trusting your structure. And once you do that, you're lost.
Yes. Yes. And by the way, when Mike says moving down, when he was referencing what Donnie said, he's talking about moving down in time frames. So these are 15-minute candles now.
Correct.
These are 5-minute candles, right? 3-minute candles. And you can see in the 3, it's moving up.
Yep.
Right?
Actually, sorry, I'm expecting, go to the 1 for a second, just really quick, just to show the trending here. All right, so the 1's moving up. You see 1, 2, 3, 4 out of the last 5 candles have all been bullish heading up, but it's all moving in a direction above the demand zone.
Yes.
So like I got in at the back wall. I'm in profit right now earlier.
Nice.
But now go to the 3-minute. A little bit less noisy. You'll see 2 candles heading there. So that's the last 6 minutes. Go to the 5. 2 candles. 1 again moving up.
Yeah.
15. We're just showing like this is what we're talking about here. This is why we don't look at all of these, but you can still see too the momentum is bullish. So that's 1, 2, 3, 4 time frames where we're all seeing bullish momentum heading up. So go to 30. Yep. Okay, so this isn't there yet, but it's about to get green. There it is.
Yeah.
Okay, so this is moving into it right now, and there's still just under 6 minutes remaining on that time frame.
Yeah.
Now, in terms of whatever, we can do that in a second. But we can go to 45 or 1 hour.
Yeah.
But like in terms of targeting where this is going to close. Okay, so 2 things. Number 1, by default, we look for 20 pips, as we were saying. So I got in, for example, at 1.17894. So what I'm going to do is I'm going to go over to that 89 and then add 20 to it. That's
So
my
you get in right here.
yes. Because I tried to get in a little bit further back and it bounced up by the time I got in. I was delayed getting in. So my goal was to get in at the back wall.
Yeah.
And I did it. I actually got in on my phone. So as I got in, I was late by like 2 seconds, which had me actually enter at the front wall because it started pulling back.
That gets me.
Yeah. So that's where another thing we'll get into in terms of setup and another podcast here. But this is really important for you to understand. So as it starts moving back up, I take that 17, as I said, I got in at 17,894. So I take that 89, I add 20 to it. So my take profit right now, I actually did 1.18102, but all I really should have done is 1.18094. Okay, but that blue line, that blue squiggly line, Donna, is coming across the screen in the middle of the page. That is the 20 moving average. And if you see off to the right there, can you see what that price is, Don, for that?
Looks like right where it is. It's about 1.17972.
Drop your cursor a little bit. It should tell us off to the right what it is also.
All right, okay.
There it is.
6.8. Yeah.
So that is a very likely point where it's going to turn around. So there's a chance it might not even get to those 20 pips. It might turn around at that point. Now I'm still going to keep my 20 pip take profit because that's what I'm targeting. But if it starts to turn around there, I might just get out. But I'm going to have my finger on the proverbial trigger, ready to pull out of the market if it starts to turn around at that 20, because I'm also expecting that could be a likely turnaround spot.
Yep.
And that's just the way I approach it. But
and that's one of the things. So you're gonna have your own philosophy as you start to learn to trade. Mike and I, our philosophies are a little bit different, but we were both targeting this back wall, right? Mike, you pulled the trigger of the back wall. I didn't, and the reason I didn't was I was watching the momentum of these candles come down because they were moving pretty fast for the 1 hour on Euro USD, and I had a feeling it was going to go past. I didn't know if it was going to stop here or here, so I just watched.
Yep.
And but like I said earlier, I was waiting for it to get here because that was where I wanted to buy, right? Which would have been a great buy if it had hit, right? Because I would have taken it from there all the way up to here. That's huge. Now we've got the 20 plus pips. The difference is, and this is why it can get a little frustrating sometimes, because if you're planning to get in at a certain point, if you're smart, or let me rephrase that, if you're disciplined, right, which has been something that we're all working on, right, because it's us, right? But if you're disciplined, and this is when your plan is to get in, you wait for it to get there. And if it doesn't get there, well, okay, that wasn't the trade for you. But if you start to say, oh, well, you know what, it's going to start to go up, I want to jump in up here. Well, you FOMO'd, you feared missing out, right? And what happened? Well, you might get in here, but because of its movement, now it drops here, and now you're in loss. Or you're not necessarily in loss, but you're in what's called drawdown.
Yep.
Which means you're in the negative and you're eating up your capital. And so unless it turns around and you get out when it's positive, you're going to lose.
Yep. And I think the biggest thing right now for us, I mean, as far as this podcast, what we want you to understand is we want you to have a base level confidence And when you draw out your demand zones, your supply zones, your support and resistance lines, and we'll get into when to do all that. But you can see how this structure is important because it did exactly what we were expecting it to do multiple times. And this is all we're trying to have you do is build the confidence in. We're building this structure because it helps us understand what's going to happen and when it's going to happen. And if you have that confidence, then now you have the base level knowledge and comprehension to learn the next thing and the next thing. And as you learn more and more things, now you're going to have the confidence to start a demo account and start taking your own chances for free because it's free money. It's pretend money. It's paper money. All money's paper.
Monopoly money.
Yeah, there you go.
Or,
so
or Robert Kiyosaki fan, it's a cash flow 101 cash or 202 cash, right?
Yeah, but you have the ability to now start seeing what happens and then learning that. But it's fundamental. It's fundamental that you understand this. Yeah.
Boom, new candle pops up. So this candle closed above this zone. This zone held.
Yep.
Now, did it go way down below the zone? Yes.
Yep.
It pierced it. But this zone held. The buyers turned it around and it went up. And now we have a candle that we're probably going to have some bouncing in between these two channels for a bit.
Yeah, and I would also mark the bottom of that wick as an additional support line.
This one right here.
Yeah.
Yeah. I would agree with that. I'm just going to change the color.
Thank you. My OCD is satisfied.
I figured before you said it, I knew. But and here we go. We hit the front wall, and where's it going to go? But in the end, what matters? What matters is where you entered. All right. So wherever it was that you purchased, either a buy or a sell. All right. So a buy is meaning you believe it's going to go up within whatever time frame, right? And or a sell, you think it's going to go down. Like we could have bought a sell, let's say here, if it had closed, if it had closed, let's say right here at this wall, we could have taken the sell and wrote it down and made money coming down.
Mm-hmm.
That's a beautiful thing. So it doesn't matter whether the market is going up or down. So many people think, if I buy a stock and the market goes down, I lose money, right? Well, this is similar, except you don't have to lose money if it goes down. You could actually make money. You make money no matter which direction it's going in. You just have to pick the right direction. And so what we're going to teach you is what we're learning. And I need to emphasize that what we're learning that's helping us to make the decisions to say, okay, this is a good point to buy. This is a good point to sell, right? Or the 20 moving average, like Mike was talking about, this blue line, that's a good point to sell. And if you bought it here and you sold here, you would have made money, right? If it was buy. And it doesn't matter how much money. How many times can you take a profitable trade? Unlimited, right? Because you never go into the negative. You're always taking positive, profitable trades. If you have a lot of losing trades, that's a different story. Once your account's gone, you either have to refund it or your account's gone. You're done. So you do have a limit to losing, but you don't have a limit to profiting. So, but with that, we are at time for the podcast for today. Really appreciate all of you being here. Please, hey, share this. And by the way, what we're learning, all the stuff that we're learning is part of our quest, right? And you can join us in this quest. Just go to q2am.com. That's why we've got this here on our screens. I'm going to stop sharing my charts, but you can join us, and you can get all of the trainings that we've done with Donnie Pips are all recorded. And when you get into the quest with us, you get access to all of those recordings going all the way back to September when this started. I think it was the last week of September when we started this. And that was of 2025, so it was a few months ago. So great opportunity. You can catch up to where we are just by joining us in the quest, but you have to do that to get access. So go to q2am.com and join us. Otherwise, hey, we'll be back here tomorrow, 10:15 a.m. You can expect to see us live